How are you doing, traders? This week caught my attention the quantity of wedges that we have during the week, during the days that we trade on E-mini ES during the trading hours. And I'll show you some of those setups, wedge setups, and how to manage those wedges and how to set your clear trade management for each one of those cases. So, if you want to watch more videos like this, please the click button and let me know your comments if it is a format that you would like to continue watching in. And the idea here is to show more about how to trade wedge in an effective way and what to expect from each one of those patterns. For me, this is my favorite pattern. I am really the last 3 years trying to masterize the way that I trade wedges. In this video, just will show you the potential of each one of those pattern has, the targets and the stops, and what it could, how this could help us to get more profitable trades. And at the same time, when a wedge fail, we have a great opportunity to making the right decision and the quick decisions when we are trading and having a low probability event of a wedge fail. Okay, so let me know in your comments your view about this matter, these setups, this pattern, how the way that I'm showing here how to trade those patterns. So enjoy the video and please click the like button. Thank you. Let's start this video with the definition. We're getting back to the definition. I already did this video before. I'm putting just a refreshing of what is needs to be known before entering into the analysis that we're gonna do. First of all, that's a phrase that I use. I like that phrase in wedges I trust. So usually you will not see me betting against a wedge. Usually I use the wedge to exit when it's happened, when in a favor of a train or something. I do respect wedges, and then I'm not I'm not a fan to bet against wedge because usually you are not gonna be happy with the result, right? What is important to know that when you have a wedge, if this wedge will fail, is basically we'll see how when it's gonna fail and how it is matched with the way that I trade. I make my trade management during the day because it has a connection, right? So the first thing that we need to take a look is wedge could mean test and inflection points. So decision point, that's really important. You know, wedges could be a flag in favor of the train when it win the train, or could eventually fail in 25% of the chance. So 75% of the chance the wedge is a flag, 25% of the chances the wedge could fail and give you a different move. So it's a low probability event to have a wedge fail, but it could happen, especially when we are in a trading ranges context. Okay, especially when we are in trading range context, wedges trend to fail with a little bit more probability. But when we are in a trend, to be honest, that 75% of the chance to be a flag, it will increase based on the trend. Works as a trend reversal or failed wedge when we are in a trading range. It will works as a trend reversal, so it will works as a wedge top or wedge bottom, double bottom or double top, and then reversal, or as a failed wedge. But this is really even even very low probability because we have the wedge and also we have the trading range edge at the moment. So we'll see something like that in the examples. But if we have a low probability of breaking out below the wall or above the wall, the wedge, then with a trading range that probability increase. Okay, so you can even make a kind of four elements here, but if we are in a trending context and we have a wedge in the weight of trend, we have 75% of chance or more to have a trend resumption. If we have a wedge we're in a trend, we have 25% of chance of that wedge to fail. Okay, fail in favor of the trend too. Okay, sorry, against the trend. When we have a trend and we have a reversal, which top, we have good chance to get two legs down or in a low probability of that wedge fail, for example. But when we are in a trading range, that works very well for reversals. We have 75% of chance of reverse versus 25% the chance or less to really that wedge fail and break out the trading range. So those are the elements that we'll need to consider in terms of how to match context versus the wedge. Second thing is that the wedge has the advantage that we can give us some previsibility what could happen. For example, we know that after a wedge we're expecting two legs, pull back, you can see up and down, or sideways. So we always, or most of the time, we're gonna have two legs, pull back or sideways. You'll see in any example that you can find in wedges. If you don't make two legs, then it's a failed wedge. So that's the element. So it needs to make two legs. Sometimes, and we'll see some example here, it makes two legs and didn't get the target, but it's satisfying what we're looking for a wedge, two legs, pull back or sideways. What it means is when it makes two legs and didn't get the target, it means that the another side is stronger, so we'll have trend resumption. Right? Basically, it's that. You know how to trade when works and when fails. Exactly. You know what is how to trade when works and how to trade when fails. Basically, is we're gonna see in examples. And the probability edge that we always need to consider, we have 25% to chance of breakout below channel line or up above channel line, and 20% chance of breakout below a trading range. So we always need to have that in mind. The next element is a wedge has a trade management with clear premises. We have a clear target, predefined target is the start of the wedge, basically, or two legs up, two legs down of the start of the wedge. Those are the premises. We have a clear protective top, usually below the signal bar. It works well, but depends of where we are. If we're in trading range, probably we'll need more bigger, a wider stop, preventing that we have an overshoot of that trade range. Risk reward more than two times. It's usually you can get that. When you don't get that two times, then it means that the another side is more stronger, right? You can use it for scalps or swings, whatever is your preference. So you can take a wedge and try to make a high probability scalp, or you can set more just stop more wider and then try to make a swing depending on the context that we are on. Okay, that's basically the refresh I would like to do before starting to review the week of July 8th with some example of ways, okay, how to trade it. Let's start with the day in July the 8th. So if we see to the left, we're coming from a trend, right? Trend that lasts whole day trend, so it's a strong trend. So and then we have the first wedge in 7, 11, 14. We see here 1, 2, 3 Usually when I have a wedge like this is the first wedge. We have we don't have bare bars, bull bars here coming in this leg, so it looks a very strong leg. But it overlapped. We have here a micro gap, especially when you're looking for reversals. When you have a micro gap open here, it's something to that could it will makes to you need to pay attention because for reversals like this, you need it's better not to have micro gap open because micro gaps are signals that we have a market that has been displaced this balance price. So here, this micro gap means that the bears are stronger. Then when you have a wedge like this, double bottom, perfect double bottom H2, this is a great entry about 19. And then you can look for two legs up, looking for reverse this, and then looking for this target here. So what is the target of the wedge? If this is a wedge bull flag, as we're looking for, this is the target here, right? So minimum target is two legs up, right? Looking for this target here. So we were looking for 3.5 points, right? And then if you're looking for two times this, you can say that the minimum target is to get two legs up until this point here, right? Which makes total sense. So this wedge here, this entry 19 needs to go here to be satisfied from the point of view of risk reward. But from the point of view of wedge, and we're expecting two legs up or sideways. So starting in 18, this is the H2, we count. One, pull back, two. Then we have two legs, double top, and then an L2 here in 24. So if you're long here, you need to exit in 24 because of L2. So this wedge makes the two legs, right? So accomplish what we expect from a wedge, but below 24 is a trend resumption as we have here. So you see, it's reversible because we are entering here looking for two legs up or sideways. It makes the two legs sideways and fail, and not fail, sorry, and then trend resumption as we are coming from a trend. So this is leg one, pull back, leg two. Basically, it's the move that the market makes here. So you need to exit below 24. This wedge didn't satisfy risk reward, didn't give us a good reward that we're looking for, but it's not a faded wedge. It makes what it needs to be done. Then we have another wedge here, 22, 1, 2, 26, and 3, 33. This is another wedge. And in this case, this is not a wedge bull flag because we already have one wedge bull flag here, and this is a double bottom. So this we can consider this as a trading range, right? So this is a wedge bottom trading range with double bottom, and then 36. This is 33 is the signal bar that we're waiting for a wedge, and 36 is the second entry long. So we can enter in 36 looking for two legs up. Guess what? That's one, pull back, leg two. If we goes to, again, the same rule, we're looking for 3.5 or 2.5 risk here. And we can say that we can get two times that, right, here. So you exit here. Your target could be even here where this wedge starts, but two times is good to exit. So it makes two times two legs, so it satisfies the trading for the point of view of risk reward, but also satisfying from the point of view of what we expected from the structure, that is two legs up. And when you see here, two legs up, L1, L2, you might exit somewhere below here or here, 61, because this bar were not we're not triggered. This here below 62 is an L2, and then you exit below if you are still holding. But if you see this one, you can exit here 60 or 759, or here 54. I will exit eventually. So those are the ways that you can manage this wedge here. Then you have another wedge with a signal bar, 52, 55, 63, double bottom. This is a wedge bottom with FBO. And then this is the second entry in H2, 74, 75. We see leg 1, pull back in the same bar, leg 2. It satisfies again. And then in this case, if you took that one, it goes to the target, minimum target with the start wedge start here. And then you get at least signal bar here. You get two legs up, you get the target. So we have three wedges here, two works, two X, the war, and one didn't work, the 2X, but give you the opportunity to get out and break even. So three wedges, three three wedges during the day of July 8, and then two works and one give you opportunity to exit on break even. In the next day, day 9, we don't have a clear wedge. I'm trying to look for clear wedges here, not something that is. This is a trading range at the beginning of the day, right? I'll say that we have here 1, 2, and 3, but didn't get the 3. The third legs down. Okay, sometimes we have truncated wedges like this because we have a support there. Here, for example, we have a support moving average here, so sometimes it didn't get the third legs down. I'll say that this H2 is a good entry, but not as a wedge, more than the FBO of trading range to get the height of the trading range. But then we have a wedge here, a little bit more clear one. One leg, pull back, second leg, pull back, third legs. It's a wedge top because it's in the trading range, wedge top. And then we have in 37 a second entry short. So 37 is the entry. It's the entry, and then the stop is gonna be here above the trading range, and we're looking for the low of the trading range of a target. So looking for 2 times at least. We didn't get there, but it makes one leg pull back, two legs testing again the moving average, and then find the support and fell. So it makes two legs down, didn't get the risk reward. So we're not satisfied from the risk reward point of view, but it makes the two legs down. So if you make the two legs down and you see that it's failing in the moving average and you get this 41 failing in the moving average, you can exit on that 41 if you want. And then the nine we have another wedge here, 52. See, leg 1, leg 2, leg 3, which is 61. Signal bar, and then we have an H2 in 66, right? And it didn't get the two legs up, the two legs reversed. So this is a failed wedge eventually, right? And then we can say that starting here, this this spike 64, 66, we need to count three more legs. So 1, 2, 3, and then we have another signal bar with an H2 in 73, 1, 2 legs down. So here when we have this, we don't, and this fell, we need to be careful and not taking again these 60s, because we need to have three legs down, more than three legs, when a wedge fell like this, to see where it goes. Right. Eventually, it's better to exit of this loan and wait more price action. Wednesday, July 10th, has the best opportunity of the week. Had the best opportunity of the week. We see here wedge, clearly wedge 1, 2, 3 pushes down, double bottom, beautiful. And then this, it's a bad signal bar, it's a dodgy, but it's a gray FBO. Below 2, this is a double bottom H2 bull flag considering this spike, and then a wedge bottom in a trading range, day trading range, and an opening trading range. So if we add that with bar A18, we should have in 80% of the time the high of the low of the day already defined. This 90 is a beautiful entry. But if you're not convinced on 90, as I say, so 1, 2, 3 push down and then a pull back, trying to get a 50%, you can do something like this and see where the 50% is on buy right there. Look where this bar comes, 50%. So 21, 22 is basically the H2 entry, the signal bar entry. So if you enter in 19, that is the best entry, signal bar, above the signal bar, you use just your stop. Why the stop? Because below 19 is a trading range breakout. It's a channel line breakout, this channel line, and you have 25% of chances to break out below this line and 25% chances to break out below B2. That is the limit, the lower limit of the trading range. In that sense, you put your stop here and then you should be happy, right? Because this is a first leg and then pull back in a wedge bull flag eventually here, and then leg 2. And this is a trade that you don't exit, and you look for 2 legs up, right? And then looking for this high here. So this is a minimum target right here. So you enter here, you get 2 times your entry here. Basically is that. So you get 17 points or so, right? Something like that. Yeah. So let me see. 7 points here, right? Stop it here. Exactly where's the point. Of course, this wedge is a great opportunity to get a swing, but we're not talking about that. So you get this for swing here. This is the target. So leg 1, pull back, leg 2. You can exit also in the close of that bar, or below. You start to trail your stop below that bar, right? And then exit when you have the leg 1, leg 2. For example, leg 1, leg 2 projection like this. Leg 1, pull back, leg 2. Here, this beautiful bar is the exit. So eventually, if you get there, we're able to get 18-point swing here. Basically, that's the beautiful wedge entry. And then you start the channel 1, 2, 3, right? And this is another wedge. This is an L2, L1, L2. You enter this L2 and you see there is not 2 legs. So it's a wedge fail here. So just 1 leg here. So you don't have the 2 legs premise. So when it's happening, we can consider this a wedge fail. When a wedge fail happens, then what you're gonna do, you project the entire move it off. So you make this channel line here, put it there. Let me do it this way. Here. So we can say that this is the wedge, right? And then the movement, when it's a failure wedge happening here, then the movement should culminate, the mission move up. where it goes. Look at that. It was exactly there. But in the next day, right? But it goes there. Okay. Then we have, I remember that I said when we have wedge fail, we're looking for 3 legs up again. 1, 2, 3. So 76 is an exit 3. But then we have 77. It's really hard to get that, but look at this. This is a movement ends here, and here we have another failed wedge above 76. So if you see that 76 above that, change the premise. What is the premise? Failing going down, right? So you don't buy the close of 76, but you wait a little bit more and see what's happening with 77. It goes below first, you put your stop above 76 and you enjoy that. And what is the target? It's basically, if this is the wedge, you get the lower 77, 48, and goes again almost there. Oh, look at this. It's beautiful, right? Of course, for the day you're not gonna get it, but then you can make a scalp like this, because at the end of the day, put the 76 up or the leg up. You see that you got there. This is also something you need to consider for the end of the day. But again, failed wedge, we expect 3 legs up again, more 3 legs up in that sense. So let's see that if you get short in 46, you don't expect your premise dead above 44 when it doesn't make 2 legs up. And then, for example, if you see the bar by bar here, how you trade, if you're short in 46 because it's an N2, and you see 3 consecutive bull bars here, and 51 closing, I personally, and I think that I did that, I revert in close of 51. I do revert in close of 51, looking for the failed wedge, right? And then when you have this, you don't have to look for a new shorts in here. I think that in this moment we're looking for this wedge fail move up. And look at this. This 59 is getting below 44, testing that breakout point, and then goes up. So we see here great wedge bull flag or H2 bull flag trading range, and then couple of failed wedge, and where it goes when it makes this low probability event of failing wedges go directly to their targets. Good examples in this day. That was a great day for a preview of reward. So we get there these targets here, and then we have this strong 8, 9, 10, 11 spike, bear spike, and then wedge with 13, with 17, and then 23. So we have a wedge, spike, and channel here. 19, 27. Here is really hard to get it because sometimes you see here 11, 19, 23, it makes the sense that it's being broken out below, and I see that way, and then you can expect 2 legs, 3 legs down again, 1, 2, 3. So the wedge here failed and make more 3 legs down. Of course, as we are in the left, we're coming from a strong trend. This is not accelerating because we have support at the left, right? We don't have support at the left, probably it will goes down even more far, right? So wedge 31, 44, 40, 55. So we have a bad signal bar here, but enough after this FBO for 3 consecutive FBOs. You can get in here, looking for the 2 legs out, 1, 2 legs, This is the target eventually, this high or this high. You see here where it starts, which starts is here. You can say that somewhere we get it here. So leg one, pull back leg two, and we're out. So tiny bar goes to two legs, and then we got a good risk reward here, right? So that was the Thursday 11 and the wedge that we had there. Friday, let me see Friday here. Friday was a little bit tricky because we have a wedge top here. If we see to the left, it was high on this trading range. So 29 is a good entry short, L1, L2, 29, entering 29. And then if you see, the target will be especially this 11, right? This 11 low. We get it later, but this is not related to the wedge. This is more a movement, different movement. But 11 low is a target of this wedge, and then you enter below. Below 29, trigger in 30, and you see that you might have two legs down. You know, this is one leg, pull back, two legs down, and then exit in 32 is, I think that is a good exit. But if you don't exit here, you can exit above 37. That's an H2, right? Basically, that's the exit here. And then, guys, we see this here. One leg down, up, second leg up. 1, 2, and 3. This is a failed wedge. Failed wedge, again. But this is in a trading range, height and trading range. I don't like this one because it was high in trading range, so I'll wait for the trading range breakout eventually here. But this will be a failed wedge pattern. It's not the best location, it's not the best context for taking above 41, but it's a failed wedge. Okay, of course it goes probably to project this up, okay, like this southern leg up, measure move up. So that's basically what's happening. And then you see here another wedge, 55, 60, 72. Look at this. And then respect here, two legs up. What's happening? No two legs, no legs. So it's breaking out. So when you're breaking out, you sell any close here, 63. You can sell here, right, below the wedge, and the target is basically the measure move of this wedge up down, basically there. Okay, so we have more than, this is the target. But then as this bar was this, you could get the low of 33 as a target in two legs. So one leg down, pull back, leg two, exit in 79. So 79 is a great exit for this failed wedge too. This is a failed wedge. Okay, and here when you are buying here above 44, your target needs to be two legs up. So then one leg, this is just one leg, pull back, second leg, and then below 57 is the exit. So you may get here $15 or so below that bar. So that's basically what looking for here. And then here, if you get this short here in the close of 73, you can exit in the close of 77. It's been 75 points, right? This target has this trade that I made makes 10 points here, and here 14 points. Beautiful. This is good. This is very the nice trade. More than 10 points, less than 15. This is a good trade to take and exit. 13 points is really good one. Okay, because these trades are really low probability and this is not happening frequently. Okay, this one are not frequently. We have this wedge with 2 legs down. It makes, this is a good trade too. It makes 13 points. This is the kind of trade that we like to. I made this trade, but I did it basically trading. I did this trading range down, measure move, and exit in the close of 32. That was what I did that time too. Well, that's it. That's what I want to show. Please let me know if it's clear for you. Let me know in the comments if you want to learn more about wedges and how it works. Let me know if you have any additional clarifications to make regarding wedges. Happy to answer you if you want. Okay. Let me know your thoughts about this way too, to see if it's something that is really useful the way that I'm making this video in order to help more people. Thank you.